Today is Tuesday, November the 4th, so let's take a look at the futures. And the Globex high was reached at 8:30 in the morning, and there was no question about coming back and testing that Globex high. The closest we got was right at the open, never made it, and we drifted down, and we played the Fibonacci's. So from the Globex high to the Globex low, we've got these yellow Fibonacci's, and you can see how 78.6 was support. Then 61.8 was support, 78.6 was resistance, support at 61.8. When we failed that, we came down at 50%, and then we finished the day up just a little bit higher than the 61.8%. The volume in the markets was relative volume, so relatively average volume, which we don't always see. We normally see a little bit less, as you recall. But the advancers to decliners were almost a factor of 2 to 1, which is going to take the stock market breadth, the oscillator, a little bit higher. So probably up to this 100 level, right where we last had a high, where the divergence between the two moving averages that the oscillator looks at, or the oscillator is created from, retreated last time. But there's also some other telling things, and we need to look at past history, because if we're right back here, what does past history tell us? Let's go back and look now at the S&P. Let's look at the S&P. Let's not look at the Ichimoku, because everything's running free in the Ichimoku. What we can see, though, is that we created a gap today. We still have a gap left from Thursday, and we've got this old gap yet to be filled. So I've been calling for the market to going down. It sure hasn't happened. But let's look at previous S&P. So we're at an all-time high. Let's look at the previous times where the S&P went down. And that would be September the 18th, July 25th, and of course the famous one that we can't forget, last October. So October, July, and September. Let's look at the volatility index. The volatility index right now is at a low. Let me just put this line right here. Is at a low, which we saw last in July, and then it started to climb till that August drop. We had this other one here, May. April 18th started to creep up, and then a drop. So if the volatility index creeps up tomorrow, just be aware. Now let's go back to last October, where we had the volatility index just a little bit lower than it is now, and it stayed there for quite a while, and then it moved up, and then it got to its peak on Christmas Eve, and then started to go down as the market returned back to its bullish state. So whenever we're at these lows, these low, this is a measure of the number of puts that are bought to protect or to hedge against a drop in the market. And when the volatility goes up, the market goes down. When the volatility is low, the market is strong, but we have to be careful because we are at a previous VIX low. In fact, it's been the low. This is the lowest that it's been, with the exception of just a few days, anytime this year. So just be careful. Caterpillar, just going crazy. I missed out on it. Still holding short calls on my stock. C'est la vie. It's still a profitable position. Could have been more profitable. Creating a gap here. Let's keep an eye on that. Look at the volume. A little bit lower than Friday. Apple pulled back from its high, but finished up near its high. So it's getting near that Fibonacci extension of 127.2%. Let's take this one out because it's not a very strong one. But 27.2 is a strong one where you could expect to see some reversal. And this type of a candle may indicate some kind of exhaustion in buying. The volume was a little bit below average when we had some very steady above average volume, which is industrial buying, not retail buyers like us, for Thursday and Friday. So let's keep an eye on Apple as well. It's still a very strong stock. It's likely, if it comes down, it's likely to come down and test the 8 EMA. But with Christmas coming up, this should be a very strong quarter for the iPhone, for the EarPods, for Apple TV, for continued adoption of the credit card, and Apple Pay. GDX down 44 cents. I'm still looking for it to break through thin resistance, but it looks like that's going to be less of a likelihood. We had fairly large volume today, and we finished near our daily lows, right where the 50 EMA and the 8 EMA coincide. So that was strong support. It should be good support going in for tomorrow. So if we can get any weakness in the dollar and weakness in oil, we should see a move over to gold and the gold miners. WDC up $1.10, up over the 200. Whirlpool, beast of a stock, making a big rebound off of this pullback and a bounce right off of 38.2 on Friday and the cloud. So that would have been a signal to keep an eye out for a bounce and possible buy-in. And I may just sell puts in Whirlpool tomorrow. I almost did it today, but it was pulling back, and then it rallied upwards. It rallied up a little bit ahead of the market and finished up with a fairly good close and fairly strong daily volume right at the close there. So let's watch Whirlpool today, and let's look at some December puts to sell if you want to be a cautious trader and get an opportunity to buy Whirlpool at a lower price, but to earn premium if it continues to move up. I'll tweet whatever I do there. Amazon at the bottom end of its candle. The Chiku span has broken out over the 200, still has these 50s in the cloud in the way. But as we move along, resistance decreases in the cloud, and Amazon going into the fourth quarter could be a good stock. And you can sell one put for Amazon December 20th, which would force you to buy 100 shares if it falls by 10%. But we'll look at that tomorrow as well. Do you think Amazon will fall by 10%? If you don't, you can sell a Delta 20 put, which might bring you $4,000 in premium. Google, strong day off of its high, but still up, strong momentum. So the market continues to be buoyed by news that now even China is saying that the talks seem to be progressing well. But if the talks are progressing well for China, it's unlikely that they're progressing really well for us. I just don't see China capitulating on the main things that the U.S. is looking for, which is intellectual protection of intellectual property, strengthening of their currency, and a commitment to buy everything under the sun just before Christmas. Remember, a lot of the Christmas buying to stock the shelves has already been done. If this gets done in the next 2 weeks, it's too late for manufacturers to buy goods to put on the shelves for Christmas. So just keep that in mind.